Good day everyone, and welcome to this video about Credit Suisse, a well-known Swiss multinational investment bank and financial services company. In this video, we will be discussing the history of Credit Suisse, its current operations, notable events, controversies, and future prospects. What is Credit Suisse? Credit Suisse was founded in 1856 by Alfred Escher as the SGA in order to fund the development of Switzerland's railroad system. It later merged with the Swiss Bank Corporation to become Credit Suisse Group in 1997. Today, the bank operates globally with headquarters in Zurich and has a rich history of financing notable events and companies. Credit Suisse's operations are divided into two main divisions: the Investment Banking and Capital Markets, IBCM Division, and the Wealth Management, WM Division. The IBCM Division provides corporate finance, debt and equity underwriting, merger and acquisition advice, and securities sales and trading services. The WM Division offers private banking and wealth management services to high net worth individuals and institutions worldwide. What is its history? Credit Suisse has faced several notable events and controversies over the years. In 2008, the bank was one of the primary culprits of the subprime mortgage crisis in the United States. It faced a $2.6 billion fine from the U.S. government for helping Americans evade taxes in 2014. In 2016, the bank settled a lawsuit over mortgage-backed securities for $5.3 billion. In 2021, the bank was hit by the Archegos capital management scandal, leading to billions of dollars in losses. Despite these controversies, Credit Suisse remained a prominent player in the global financial services industry. It has recently implemented several strategic changes to improve its financial performance, including streamlining its operations, reducing costs, and investing in digital technologies. Why has Credit Suisse declared bankruptcy? The news that Credit Suisse, the second biggest bank in Switzerland and one of the most significant financial institutions in history, had been sold to UBS, Switzerland's largest bank and a longtime rival, came out overnight. In a hasty effort to not only limit the confidence problem at Credit Suisse, which reportedly saw withdrawals of up to $10 billion last week, but also to prevent the spread to other banks, the Swiss government and regulators hastily negotiated the arrangement. Around $3.2 billion will be paid to Credit Suisse by UBS. The Swiss government announced that it would provide more than $9 billion to offset any losses that UBS might sustain as a result of acquiring Credit Suisse, according to the Wall Street Journal. Moreover, the Swiss National Bank provided UBS with more than $100 billion in liquidity to aid in the transaction. Credit Suisse's problems took on new urgency this month after the collapse of Silicon Valley banks spurred questions among investors about which bank would be the industry's next weak link. Swiss authorities helped steer the deal with UBS this weekend after Credit Suisse suffered a sharp fall in its stock price last week and steep outflows from customers. The coming days will likely bring more updates for Credit Suisse and UBS, as well as for the broader banking industry. Why did UBS decide to buy it? Regulators pressured UBS into the purchase because they wanted to stop any more anxiety about the stability of the banking sector. Last week, Credit Suisse became the most recent bank to experience a significant drop in confidence, which caused its stock and bond values to plummet and prompted clients to hurry to withdraw their money. The Wall Street Journal earlier reported that the bank experienced client outflows of up to $10 billion per day during the previous week. If not resolved, regulators worried that the bank will go bankrupt. The Swiss financial regulator FINMA stated that immediate action by the government was required to protect both the Swiss and international financial markets. What were the agreement's terms? In the all-share transaction, UBS agreed to pay Credit Suisse stockholders 3 billion Swiss francs, or roughly $3.1 billion. Also, the Swiss government permitted UBS to write off nearly $17 billion in Credit Suisse bonds and agreed to underwrite 9 billion Swiss francs in possible losses on Credit Suisse's assets. How did the deal's investors respond? Early on Monday, investors dumped shares in European banks, but those shares eventually recovered some of their losses. UBS's stock price increased. Nonetheless, investors sold off all additional Tier 1, or Act 1, bonds in the banking industry. What effects do the problems at Credit Suisse have on the global financial system? Working together with numerous banks and institutional investors, Credit Suisse was firmly rooted in the world financial system. According to investors, investor concerns about contagion contributed to the recent decline in European banking equities. Investors have speculated that the Federal Reserve may pull back or postpone its intentions to raise interest rates further in order to control inflation as a result of the issues with Silicon Valley Bank and Credit Suisse on a larger scale. So there you have it, an overview of Credit Suisse and its bankruptcy. We hope you found this video informative and helpful. If you have any questions or comments, please leave them in the comments section below. And don't forget to subscribe to our channel for more videos on innovative, hot, and curious topics. Thank you for watching. See you in the next one.